Bob, Brett, cool, Lalit, can you guys hear me? Just want to make sure that the audio works. Oh, good, Ted, thank you. All right, Lalit, Cecile. All right, everybody's here. All right, very good. We're all good. All right, sorry I'm late. We'll try to catch up. Thank you for broadcasting on the YouTube. All right, then let's start. Welcome to Tradespoon in Yellowtown. My name is Vlad Karpel. I'm the CEO and founder of both companies. So today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. You can always pause the screen if you need more time to read the bio. Disclosures are very important. If you're new to trading stock or options, I encourage you to pause the screen and visit the link on your screen, optionscreening.com, so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, let's take a look at the market since this morning and see if there's anything interesting. Again, we talked about 10-year yield. I think that's probably one of the most important charts. We did break below 3.8, right? Close to the, let's see, let's do 1 day. So basically revisiting the close to the lows from the Monday when we had that sharp sell-off due to the carry trade. So we're revisiting this level. We're below 3.8. That would be a sign of concern because, and you can see, even though we're finally normalizing the yield curve, 2-year is same as 10-year yield and less than 30-year yield, we're still trading below 3.8, which is, if you zoom out, basically goes back to, we're right at 2024 low. We broke slightly on that Monday, 3.7. Next level would be 3.3. And, you know, one of the interpretations is that, yes, yields should go down since Fed is going to cut the rates in September. But nobody's talking about, you know, right now Fed rate is 5.25, 5.5, and 10-year yield is at 3, almost 3.5. So there's 200 basis points differential, or at least 150 basis points difference between what the Fed is planning to do in the next 2 years versus what it is now. So when people are aggressively buying bonds, right, you can see TLT is also retesting August highs or close to, that could be interpreted with the recession. And the second most important chart is the Japanese yen. Japanese yen is revisiting August highs, which is bearish for the market because that carry trade is still, people not sure how it's going to be affecting major financial institutions. And same thing you can see on the Nikkei market, where Nikkei again dropped close to 10% in 2 sessions, right? In 2 sessions. So now that this support is broken again, right? This is going back to April lows when we had a sell-off in April lows. We broke to this level, and that potentially can pull the market further down. And you can see that any rallies are met with the additional pullback. You can see QQQ is below 50-day moving average. It's a below 50% retracement. It's below this uptrend lines are also joining, fighting for the 50-day moving average. They're doing a little bit better. But QQQ rolled over, right? We tried to stage a rebound. Same thing with spiders. Tried to stage a rebound. We were as high as 554, and now the market is pulling back and below 50-day moving average. We'll see where we're going to close. But again, in terms of support and resistance, if you look at where the open interest is, where dealers are positioned, is there is support at 550 and 50-day moving average. But if we don't hold that, we could have a sharper pullback. And same thing with value stocks. They're kind of retesting yesterday's lows as well. So again, weakness, I would say, across the market. Let's see how the staples and utilities are doing. So this is all red. VIX is back at 22. TLT is up. I mean, REITs are doing a little bit better. Healthcare stocks are doing a little bit better. Retail is still down. Transportation, let's see, insurance. Yeah, consumer staples is flat. So I would watch spiders. If we close below 550, right? If we close below the 50-day moving average 550, we have our I think the futures is already below. Yeah, so S&P futures September contract is already below 50-day moving average and basically sitting on yesterday's low. So if this low doesn't hold, and we already made new lows not that long ago, then that opens the door to 5,400, right? 5,400, which is this level. And if you look at S&P, it's opens the door to 5,400, 5,400. Any questions? Fred, good afternoon. Lily, thank you. Yeah, so for now, it's either me or Keith will cover Wednesday. And we have more people joining. Thank you, appreciate it. So watch list is, let's see in the watch list, what are some of the other stuff. So materials are making new lows. So false breakout, right? Everybody got excited about the value stocks. We had a clean breakout, May highs, and now we're rolling over and dropping below that level. Same thing with home builders, approaching 50-day moving average. Metals and miners are weak, on its way to retest August lows. China has been weak, below 50-day moving average. VIX is at 22. Industrials holding on a little bit better. I was planning to buy General Electric. Let's see. General Electric looks like it's stabilizing around 50-day moving average. It's actually up on a down day, so that's positive for General Electric. Junk bonds are trying to find the bottom, right? They're rebounding, so that's a good news for the bulls, that at least junk bond market is not rolling over towards the end of the session. Let's see, we talked about healthcare still. So big reversal on health is not great, but this kind of shooting star reversal could be a bearish price pattern. And that's the moving average, is that the value stocks are overbought and technology is not catching a bit, so market has more room to the downside. Transportation is still relatively weak, just above 200-day moving average. Insurance and telecommunication is up, right? We talked about AT&T. Continues to grind higher. Any earnings? Did you guys do the Z-scaler? Let's look at the earnings next. Spiders, I would watch spiders. We'll see where we're going to close if we're making new lows. All right, let's look at the earnings. What is interesting? So after the close, HPE. So let's do HPE. That has been volatile stock. Let's look. HPE is a good candidate, right? It's pretty liquid and it has volume. And the earnings have been pretty volatile. This earnings have been volatile. This earnings, so past few earnings have been volatile on HP. That's $18 stock, so we can trade that. Let's look at the yellow tunnel, make sure that's actually part of the earnings power trader as well. I'll have to add it. Okay. Let's see if we wanna What other stocks? Okay, so HP is one after market close. Oh, AI. Yeah, we want to do AI. At least I want to do AI. Let's see. AI is extremely volatile. After market close, CPRT next.
Hey, Don, this is Michael Steinbeck, broker from AG in Chicago, calling about your Wendy Kirkland trade.
AC Johnson is not liquid. So AI. Yeah, that's about it. And tomorrow, let's see tomorrow, before market opens. So Broadcom is tomorrow after the close, so that's a good one. Path and iOS. Yeah, that's it. All right. So let's look at the estimated move. HPE. HP is less volatile than AI. HP has a better chart, but okay. So HPE expected move is 10%, around 10%, so $2. Let's look at trade here. Let's see how it's positioned. It's around 10% the past few days. Let's go look. Fred, good afternoon. Big TLT jump. Yes. TLT is moving. Markets are moving. Let's look at volatility. Dealer exposure. HPE. Okay. So again, looks like dealers are short the gamma. Right? Dealers are short the gamma. 920, same thing, and October. So I think butterfly, right? Nobody's hedging to the 17 level, and a lot of speculation that there's going to be a better than expected earnings. Okay. So butterfly, let's look at the butterfly. So let me first see here the butterfly. Trade option. Let's see, HPE. So butterfly. So let's see. So estimated move was $10, right? 10%, sorry. What is the estimated move? Yeah, so estimated move is $2, a little bit more. So it's trading 18.5, $2 will be 16.5. So that's close to the strike. Okay, so if I want to buy 17 lag, so 17, no, it's to 17, that's almost 3.
Again, this is Mike Stone with AGT. Just calling you, trying to get
And they're all not very liquid, so 18.5. 17, 18. So $2 will be 16.5. So 17.5. Okay, so 17.5, 16 and 18.5. This is 17 strike, 16.5 and 15.5 put. I can buy maybe for 15 cents. Let's see. It's pretty large volume limit. Let's see if I can get it for 15 cents. That's the last sale. Or I can just wait. So butterfly spreads, open new tab. So similar to Zscaler, I think, you know, any negative 15.5, any negative surprises and stock will sell off, and positive it'll probably match. So 15.5, 16.5, 17.5, but that's this guy. Next in actually at 20 cents. Was breaking even probability of 15%. Right. Sorry, this is long call. Sorry, I was talking about long put fly. Sorry about that. I'm going wrong. Long put fly is 17, 15.5, but 15.5, 16.5, 70. Sorry about that. 25 cents. Okay. With the idea that break-even probability is 20%. So 80%, only 20% of the time it will reach the break-even point, right? Because we're buying out of the money, put butterfly with the assumption that the only way it could get to the strike if you have, bad earnings, which is already factored into this price action. All right. So next I lost 25.75. I put an order for 15. It did not get filled. Let me add this to Tradespoon again. Manage portfolio. Let's see. HPE. Add. Let's see. Earnings Power Trader. So, okay. So let's see if I cancel this. So let's see if I can buy it for 20 cents. Okay, so for 20 cents, I'm able to buy it. Right, so I got filled for the puts, where the middle strike is $2, 16.5, right? It's $2 away, and that's the estimated move. If there is negative surprise, if there's a positive surprise, let's look. Let's see how much I'm inclined to do a spread. Let's do vertical spreads. Let's do bearish call spread. And the first strike, so 18.5 plus 2, it's a 20.5. Where's the open interest? So the open interest is all over the place, right? So it's the, but here, biggest one, the biggest concentration is a 21 strike, right? 21 strike. 21 strike. So let's see. Vertical. Bearish call spread. If I sell 20.5 call, 20 have 21.5 call, maximum profit is 10, so I can only get 10 cents. I bought it for 20 cents. So let's see, 20.5. So let's do, let's see, how's the stock trend? 20.5 would be here. 20 would be above. Let me look at trade option. HPE. Vertical. Let's do $2 strike intervals. Okay, so here we go. 20. So the estimated move is $2. 2 plus 18, 20.5. So let's see, 20.5, about 15 cents. I'm gonna come in a little closer, 20.5 to finance, because I don't think it's gonna have a positive surprise, or even if it's positive, probably not gonna stay longer, and kind of finance this whole trade for 25 cents. Yeah, it's not gonna happen. 20, 30. Okay, we can wait. We don't have to rush. We might need to close it. So here I'm doing credit call spread. So estimated move $2. I came a little closer to get to the, I'll put 25. Yeah, 25 cents. Because the bid and ask is 20 by 30 right now. So I'm trying to get it for 20 cents. And that would be the 20.5, 22.5 call. So right now, 20 cents. And again, 95% of the break even, 80%. 80% of the time, it will not move 10% to the upside, right? But 20% of the time it can. And I think last time, actually, let's see, what was the earnings here? Yeah, here it jumped 14% and then kind of closed at 10% pullback. So you can definitely do that. And same here. Positive surprise. Okay. So, but that's the trade, right? Selling the 2022 call. Market is pretty bearish right now. Obviously, HP is selling off into the earnings, and then buying the butterfly. Let me know if you guys have any questions on that trade. So we're only paying for, yes. So bearish trade is the credit, right? Bearish trade is the credit. I'm trying to receive a credit of 25 cents, and the debit butterfly is I'm paying 20 cents. So unless it jumps above 20, right? If the HP jumps above 20, then that's where I can start losing money. As long as it stays below 20, then this is either break-even trade or profitable. Let's look at these levels again.
Yes.
So 16. Yeah. Do it in my personal account as well. So let's see. 17.5. 16.5 and 50. I don't know if you guys have any questions. Just gonna do the same trade in my personal account. Okay.
Should figure out why I was rejected removing these accounts at point cash.
All right, so let me see if I can place this straight. All right, and then we can do AI. Just give me 1 second. Okay. Okay, so that's HPE. Okay. So we are only paying, well, we only paying for bearish move and also bullish move as long as it stays below the strike price, right? So the strike price that I selected was 20 call, right? 20 call. So as long as it doesn't go above 20 level, right? As long as it's not going higher than 20 call, right? So as long as it's not let's see, 20 would be 8%. If it's going to go up more than 8%, let's say 9%, right? This would probably start losing money, right? And 10% would be more. Then it would be an issue, right? Then it would be a losing trade. So I'm playing to the upside as long as it's not more than the estimated move, which is what, 10%. As long as it's less than 10%. Most of the concentration is at 21 strike. Right, so it could gravitate toward 21, right? But I think this is maybe because of the AI play, right? And most of the AI, especially HP, I'm not sure why they're still going so strong. But I could be wrong, right? So maybe call butterfly would be better, right? But for now, I just have this. Let me know if you have any questions. All right, now let's do the AI. Same thing with AI. AI expected move, I think we checked last time, was 20%, right? So $4.5. So 26 is where there's a lot of exposure. So $4 would be 27. So it looks like 26 is the large position. And beyond that, I mean, it's, again, all over the place. So a lot of expectations for AI and no expectations for the put spread. So I would use a butterfly put spread in both call spreads, because this is a lot of positioning here. I assume October is even more. Pretty large amounts. So we can do butterfly. Let's see, trade, option, AI, butterfly. Calls. Okay, so the middle strike, what is it? 20% is 27. So let's remove the October so it doesn't confuse me. First one is 28. 28, let's see, 28. 28 strike is trading at 30 cents. 28 strikes trading 30 cents, and AI is 4.5. 4.5, so 27, 28. So this 28 is the first place. 28, let's see, how about 27 strike. 728. So 26 and a half, 28, and 29 and a half. Let's see, 29. What does that cost me? 12. All right. So let's go back to butterflies. Let's do AI. So let's do long call fly. And the first select, let's see, what did I select? 26 and a half. 26 and a half. So 26 and a half, and the middle strike is 28. 26 and a half, 28. And 29 and a half. 26 and a half, 29 and a half, 28 and 29 and a half. So maximum losses 18 cents. It's trading at 17 cents. Let's see, I can probably try, let's try 14 cents. And then the middle strike would be 28. And that's 23 plus 4.5 is 28. And that's the estimated move analysis. Okay. So here I'm paying debit, risking 15 cents.
Showing cash buying power of 79,244.
Okay.
Yeah. We'll sell 10 of these to open.
So 26 and a half, let's.
Over time, $315 plus.
So any questions about AI? So I did the last 26 and a half, 28, 29 and a half. How much time do I have? 10 more minutes. Buy to open, 5, call, expiration. So I'm gonna do 26 and a half. 26 and a half, sell to open. 28. And 30.
No, we haven't had the opportunity to. It's been pretty busy, very busy. You know, regarding your cost basis and so forth.
So let's see, 26 and a half, 28.
Yeah, I know.
5, 29 and a half, so 29 and a half.
Okay. All right, sounds good, Kelvin. Okay. Bye-bye.
$60. 30. $16. Place. Okay. Right, so I got into the call spread 26, 28, and 29 and a half. So middle one is 28. On the put side, there's really no, hedging. So let's see, option. To open more strategies, butterfly. Buy to open. But separation. So middle strike, if 4.5 down is 19. So let's see what's the 19 put trading at. 23 cents. It's also expensive. So 19. Let's see, 21.5. 19 and 1.5 months, 17.5. 17.5. Ooh, 55 cents. 21.5. 19 and 17.5. Yeah, 21.5 is expensive. Okay, so we gotta get a little lower. 21, 18.5, and 17. 46 cents. Okay. Yeah, so put spread definitely tighter range. So 19.5 and 17.5. Okay, so $1. Okay, so 18.5 and 17.5. Looks like 16 cents. Let's see those 6 times. Let's see if I get filled. $16, 20 long, 18.5, 17, 16, 18. Oops. Okay, so 20, so 17.5 strike, 17.5 strike. So long put fly. And the first strike is 17.5. So I did 17.5. Sorry, 17. I did 17. So 17, 18.5, 20. With maximum loss of 18 cents, $1.32, 14% probability of break even. So only, 1 out of 7 times this trade will work. But again, I'm betting that AI is gonna either have negative earnings, right? These lows, right? Maybe revisit 2023 lows, or it's gonna revisit the highs, which is, in my case, I did the call 28, 50-day and 200-day moving average, right? 28 kind of closes the gap from the last earnings. Kind of the same reaction that last earnings, right? So if it gets to 28, I mean, ideally want to stay at 28 strike, then that would be good. Questions? All right, GitLab got to 54. See, so this was a good example of positive VANA. Right, so we got exactly to 55 strike. What we talked about this morning, that 55 strike, and that's the 55 strike that I sold. So that was a good trade, and it's acting as a magnet at 55. So it's an example of positive earnings, and 55 had this highest strike position. And 55 and 30. So that's good. This scaler continues to sell off on 57. Let's see the scaler. And then MDB is at 260 towards the upper range. eBay is up. Costco finally catching a bit. Vino is up. Costco is up. Nvidia is still down. So Nvidia is trading towards the low. Nikkei is doing poor, down 2.5%. Tesla's up 4%. Amazon is down. Let's see how the index is doing. Let's see where we're closing. Yeah, 45 seconds. So big drop in yield. I think that's big for the markets towards the lower. Yen is up. High yield is rebounding. LQD is rebounding. That's positive. VIX is at 21. That's negative. Value stocks are able to actually break even, but looks like we're still closing towards the lower part of the range. So the rebound is unimpressive. What do we have tomorrow? Who can save the day? Market watch. So tomorrow we have initial jobless claims and services PMI. So PMI has been strong. So we'll see if either services PMI or initial jobless claim can give a bigger, more sustainable rebound. But again, we're going into Friday's unemployment data, which is probably the most important. HP is now low of the day. Thank you. Can you repeat? AI trade. Cool. Yeah. So, sorry, it's a little bit late probably. But AI trade was, the puts were 17, 18 and a half, and 20. AI, yeah, 17, 18 and a half, and 20. So those are the put spread. Fred got it. Okay, 20 cents. And AI is the AI stock, right? So that's can be very volatile. And so what HP? Spiders is kind of, you know, I mean, still red. Most of the indexes are in the, Spiders is in red. Value is flat, QQQ slightly. So uneventful rebound, we'll see. Any other questions? All right, guys, thank you very much, and I'll see you tomorrow morning. Thank you.